Welcome to Final Market Point's Lithium Breakouts. We're looking at 12 ASX listed lithium miners that have all put on massive gains in the last couple of months, and all of them have broken out of what's called a volatility contraction pattern. These gains have all been triggered by a significant event that started them all running. So we're going to look at what started it, and then as each of them rallied, what that breakout looked like. So that's going to cover lithium leaders, sisters and laggards. So the laggards are the ones at the end. VCP, what is a volatility contraction pattern, how to apply it, and then where to learn more. VCPs and pocket pivots, what we're going to see is that the majority of these lithium miners, when they break out, have not only broken out of a volatility contraction pattern, but the day they broke out, they also broke out of what's called a pocket pivot and created one of these. Then we'll look at the 12 lithium miners and their charts in detail. So what happened was the insiders started buying. So Tim Goyder bought $953,917 worth of Liontown resources on market. Tim Goyder, and he announced to the ASX on the 10th of May that he bought this amount, $953,000 worth of Liontown resources. Now he's related to Liontown Resources, so this is known as insider buying. And when he bought, we'll see on the chart, it was around 42 cents and he bought them on market. The next event was the 17th of May. What we've seen here is Tim Goyder announced along with Liontown that they're hitting the road. They're doing investor presentations. So they announced to market what that presentation entailed. So that's the PDF presentation, the PowerPoint presentation that's released to market. You can see that on the ASX announcements. But that's what's kicked off the roadshow, and we'll see that on the chart as well. Then we see the 27th of May, when that roadshow's really gained traction. So they've received institutional support, pocket pivot and volatility contraction pattern all happening at the same time. So this man here has kicked it off. Now, I'm not saying that he's moved the whole lithium market himself, but this is the first ASX lithium miner that has broken out if we look at the table that we'll bring up in a second with all of the dates. So this is the insider buying. We're seeing 40 odd cents here. His accumulation was at around average of 42 cents, and you can see this volume spike here. This is Tim Goyder buying his 10th of May. That's when this is announced to market. A couple of days later that he has bought, because you're allowed a few days to announce to the ASX what's happened. This kicks off that 100% rally, 42 odd cents to get over $1, more than 100%. But this is the first movement here. So we're going to progress through and see, this is the investor presentation that ensued about a week after his buying. So after he bought on market, they hit the road, they see investor presentations just like this one here, and the interest is sparked. 2 weeks later, a large buyer accumulates on market, and that is the volatility contraction pattern that's broken out along with the pocket pivot. Here we go. Pocket pivot. So here's Tim's buying, and then about 2 weeks later, here's the roadshow coming on, and we see a little bit of buying along here, a couple of days, bit of breaking out, but then this is where it really kicks off. The institutional support's been happening here, and then what's happened is a big strong candle closing on its highs, strong pocket pivot to break out. Now, pocket pivots are something that we can cover in more detail. You can click on the link below to see how to work through a pocket pivot and what it is in more detail, and you can also click on the link to learn more about volatility contraction patterns. But this is really what started it. 28th of May is when we've seen here this breakout for the volatility contraction pattern on Liontown, and then here are the 12 others that have rallied, all breaking out of volatility contraction patterns. 86% gain, 91% gain for Lake Resources, a lot with 30 odd, 20 odd percent, but 47% for Liontown, and then 50%. That's to close the quarter. When we looked at these numbers, their highs were actually higher than the numbers on this table. And this is what we're consistently doing in Final Market Points, where we're connecting the leading market themes with these top performing companies for better trading. We'll present shares in play for those best performing companies, best in theme, and then technical analysis like what we're doing here, and consistently in these leading industries. So you can like this video to support the channel, click subscribe for updates, and comment below to let us know which lithium miners you're trading. But volatility contraction patterns, we also have a tutorial on that. You can click on the link to see that video. But it all stems from Mark Minervini. So he's 3 times US trading champion. He started in 97 when he entered it and won the US investment championships through what was a long-only portfolio. This is unusual for the US championships because many of the competitors are using futures, derivatives, geared instruments that have helped them get better performance. But with a long-only portfolio, not trading the shorts, he won with a 155% annual return. Huge gains. That's what started the knowledge of VCPs. Here we couple that with pocket pivots, and you'll see how and why pocket pivots are so critical, because of so many of these lithium miners have triggered that VCP breakout while triggering a pocket pivot. So Gil Morales and Chris Karcher, they've described what the pocket pivot is in great detail. We have a video that links in the description below of how to run through that. But really, they've worked with William O'Neill, extended on his, and done the pocket pivot. And this is what we're going to see for the next one in that timeline. As we're moving through the charts, we can see Prospect Resources, PSC, on the 30th of June, we've got the VCP breakout, this candle right here. So we've had to zoom in because the volume to the left-hand side was so large that it really eclipsed all of this here, and we couldn't see the volume detail down below. But we're coming into a volatility contraction pattern. There's one retracement, a second one here, third one coming up to almost the same high, and then slightly lower low, so about the same percentage retraction, and then a really small one here, or a smaller one here, depending on how you define your volatility contraction patterns. Nonetheless, we've got a volume breakout, not a pocket pivot in this sense, but we do see that volume increasing here, large volume on the breakout as it's running, and then this does lead into 15 cents all the way up over 30 cents into what is over 100% rally, and if it's even from 18 cents on the breakout, still 100%, what can be a high and tight flag. Also, there's an explanation of how to trade that pattern, so you can click on that description below, or on the screen here there's a link. But that's another way of trading it. And where we are today, this is actually maintaining, we've got a 50% retracement of the rally, and well and truly in the top half, maintaining right up top, which is what we want to see from a high and tight flag. We'll see how that transpires in the weeks, months to come. Next off is IGO, not necessarily a specific lithium miner, but they are a sister company in the sense that they work within the industry. We have seen on the 1st of July, they break out. So here's a volatility contraction pattern. Large contraction, smaller contraction, good strong rally, breaks out, has resistance once again, another contraction. Now this is abnormal for a VCP because normally we're seeing these contractions get smaller. Think of the basketball losing its speed each time it drops to smaller contractions. This is abnormal to break under the 50-day moving average, but then does it and breaks out here over resistance with a bit of a volume spike, and then starts that VCP breakout. Away it goes. IGO is one of the largest cap that we will see in this group, so it is abnormal to see them rally as much as the smaller cap miners that are leveraged so heavily to what happens in the prices of lithium miners and the like. Vulcan Energy becomes the next one. 12th of July is when they break out. We've got the VCP here, so coming down from this massive rally, good strong volume, has one contraction, tries to rally, fails again, comes under the 50-day moving average being the green line, goes for another rally, doesn't quite get back up there, but holds over the 50-day moving average, flutters around it, contracts, tries to rally, attempts to break out over the swing high, fails, comes back down, but this time holds above the 50-day moving average, and then consolidates here. What we're seeing is the breakout on this crosshair. So this is a VCP breakout coinciding with a pocket pivot. Now the pocket pivot, we've seen a huge volume spike on the day coming out of a consolidation on near that 10-day moving average. So while it's broken out of 1, 2, 3 contractions, volatility contraction, and a pocket pivot, that starts the rally that we see here for Vulcan Energy. And then we move on to the next one in the list. So after we have Vulcan Energy, we have Orocobre, which is a name that many know. It is a large one, and we've signaled 2 breakouts here. All the ones that we're looking at the moment are in June, July, and August. So we can see on the right-hand side VCP number 2. But if we extend this chart back and zoom out, we see it also happened in April, and this is not the only one. So we've signaled here that this theme, they're often moving together, which is why in finer market points, we're always surfacing those same companies again and again within the industry to really zoom in and see what they're doing. Because when one starts breaking out, like we saw with Liontown, it leads to a domino or a cascade effect where more and more can rally and break out. So keeping an eye on the charts, understanding VCPs, pocket pivots, and how to trade them is critical with the leading themes. But we've got a contraction that happens here from Orocobre, rallies, comes back down, and then another contraction, but then as it's rallying back up, it doesn't break the swing high, but has a lower contraction, gets over the 50-day moving average, this green line. Then it has a pocket pivot. And that huge candle here, strong candle, strong volume breakout, signals the VCP breakout from the rally of sort of the 525 30 area all the way over $7. Then that starts the VCP number 2. We're going to see a contraction here from the highs down to the 50-day moving average. Rallies, fails to get up to the highs, push back down rather quickly through that 50-day moving average, breaks a new low, but sits on top of the highs over here. Then that rallies quite heavily up, but doesn't break this swing high. Has a minor congestion and then breaks out with volume. VCP breakout, 1, 2, third contraction here, very tight and small, and then it actually has a throwback and gets failed. For those who are followers of history and followers of Mark Minervini, quite often he will buy into these throwbacks of a failed VCP on the small run and then look to get a higher uplift, which this definitely has. $7 to $10, off it goes. Now we move through into this list, we're going to see Jindalee Resources. This had a failed VCP breakout. So what we're not seeing here is the volume conviction down the bottom. So VCP, again we've zoomed in because the volume to the right hand side of the chart is so severe that it really overshadows and we can't see the detail in the lower volume days as it's churning sideways, rounding out this bottom. We've had the volatility contraction pattern come down, touch the 50-day moving average, get back over, not break the swing highs, we can see here, come back down and then only just touch down, trying to touch the lows, staying above it, and attempts to break out of this contraction. Fails with no real volume follow through. That's a failed VCP breakout. So 1, 2, 3 contractions, then a fourth, a smaller one here, and then a fifth one. There's no real volume on this breakout, nothing significant out of this consolidation, but then we have a higher low, tight consolidation, 2 inside days here, and then rounding out the base, tight closes on what's happened in this basing pattern, and then massive green candle, huge breakout, trades up near the highs on significant volume, also significant volume on the turnaround day here, but then this leads into projection of $2.40 to $3.90 very quickly. That's the VCP breakout for Jindalee Resources. Then moving on through, we want to see the next one, which is Neometals, something we've surfaced many times in final market points, and we can see why with 2 VC breakouts. Remember the 8th of April, 16th of July. We quickly go back, we've seen what we saw with Orocobre was 7th of April, 13th of July, 8th of April, 16th of July. Very close dates. VCP breakout, 1 contraction, 2 contraction, sitting above the 50-day moving average. Third contraction, again on this 50-day moving average, coming in tight closes, tighter ranges, volume dropping off significantly, not a lot coming through to push it down the 50-day moving average. And this blue line is a 10-day moving average. What we see is the volume down here highlighted is actually higher than the last 10 days, only down days in that period. And then it breaks out with the pocket pivot before it actually breaks the VCP up here. So here's the pocket pivot breakout right down here, 2-3 days before, and then the pocket pivot is broken, 40 cents up to 55 cents, and then it rallies away. We also see this coming to the second pocket pivot that is the 16th of July, where most of these companies have broken out. We've got a rally up here, jumps near 60 cents, comes back to the 50-day moving average, rallies, doesn't get to the swing high, gets pushed back down under 50-day moving average. Then it has a double touch here. So it comes down for a double bottom and then tries to rally, meets resistance here at 55 cents, contracts once again. Then it breaks out. So here we see volatility contraction breakout number 2, 16th of July, massive volume. This is what we want to see. Strong pocket pivot on the VCP breakout, coming out of this congestion with a strong candle, and then it fails, throws back 2 days, just like Mark Minervini likes to see when he'll accumulate his own personal positions, as he will say. And then here's another one, which is interesting, into the high and tight flag. So we've got a rally here of 50 cents to almost $1. It's almost 100% gain, and then it's maintaining this. Here's a halfway line of that rally from the lows, which would be 100% gain. It is maintaining the top half. So where that consolidates, sits on top here, maybe 72, 73 cents, consolidate. If there's a strong volume breakout, that could trigger what Thomas Bolkalski calls the breakout of a high and tight flag, which can also lead to a very high statistical significance of another strong rally of similar magnitude. So that's why we're consistently looking at these leading companies. We move through to see Lake Resources, which is a favourite both domestically and internationally because of the over-the-counter trade for Lake Resources in the US. What we're seeing here, again, we've zoomed in because the volume to the left-hand side is so significant. So we zoomed in for the volatility contraction pattern. We're seeing one large contraction, failed rally, not to go up as high, comes down onto the 50-day moving average, creates a base under, falls down towards that 200-day moving average, getting sold down, but not a huge amount of volume changing hands. Is collecting volume as it moves quickly, as we'd expect, from 30 cents to 20, and then is somewhat accumulated throughout this mother basing pattern coming up to the 50-day moving average. Now, as we're seeing the 10-day moving average and the share price cross back over that 50-day moving average, we're seeing a pocket pivot down here. So this is breaking out before the VCP, while that's still being rounded out. This is what Gil Morales and Chris Karcher really went back through and back tested on through William O'Neill's trades and their own trades while working with William O'Neill to see an early indication. Instead of buying here with a cup and handle breakout like William O'Neill would, or the VCP, they're buying earlier. That's what the pocket pivot does and identifies. We're seeing this volatility contraction pattern continue, another contraction here as it's rising, bit of a cup and handle being formed, and then this sideways movement, this sideways shimmy, this consolidation is broken out with the VCP on huge volume down the bottom here. Pocket pivot does signal at the same time, because it's a strong candle coming out of that consolidation, like we see with Minervini, it does throw back and retests it, comes back into that VCP breakout, and then away it goes, 40 cents to 70 cents, and that's that potential high and tight flag. Once again, looking in Lake Resources, good strong candles here, strong volume, that's normally a critical point to see for a high and tight flag. Now we move over to Pilbara Minerals, which is another one on the 22nd of June and 22nd of July. We've got two pocket pivots here and two volatility contraction patterns. So we've had the VCP come through, round out the bottom on the 50-day moving average. This green line goes for a rally, doesn't break the swing highs, breaks these closer swing highs, not the higher range ones. Has another contraction onto the 50-day moving average, consolidates, and then breaks out. So here's a pocket pivot that's happening with the 10-day, 50-day, and 200-day moving average all on top of each other. There's a pocket pivot breakout, but the volume's just under this one, so it doesn't actually qualify. Rallies up, has a contraction. Here's this higher contraction. One contraction, 2, 3, 4, nice and tight, and then breaks out over the swing high with a higher volume candle, away it goes. Throws back like Mark Minervini likes to see, consolidates here. Then we're seeing it find another contraction. So here's the VCP, whether you've counted this as a contraction or whether it's one of the main contractions here. And then here's your final two contractions with another cup and handle, then a cup and handle, a very short one, not quite long enough for the normal qualifications, but this one most definitely is. Then we see the breakout number 2, good strong volume, VCP breakout, not a pocket pivot as it may be overextended, although it is within the range of the consolidation, so that could qualify. Read the books from Gil Morales and Chris Karcher to really understand more. Then that leads to the rally, 160, 240, away Pilbara Minerals goes. Then we move on through for Core Lithium. VCP coming from the highs, 42, under the 50-day moving average, rallies off the lows, 18 cents, comes up under 30, falls back under the 50-day moving average, becomes tighter. So this rally here, off the 18 to 30, it becomes a smaller rally from 21 to about 28, 29, 27.5. Then again a tighter. We've got a higher low and a lower high. So we're seeing this contract. Now we've got this coming up to overhead resistance. We've got swing highs to be broken. Massive breakout, huge volume, big strong candle, gets over 27 cents, and then kicks off the VCP breakout for 22nd of July. We're coming into the laggards now. As you'll notice, Core Lithium is not as high volume trade as Lake Resources and some of the large names that we've seen. So we're coming to the laggards of this theme, but they are still breaking out and having significant rallies. We've only got a couple more to look at to see that we are at the tail end of it. Now, Galaxy Resources has consolidated, they folded in, so we are seeing Orocobre and Galaxy come together, but there was still a VCP before they stopped trading. So we had one VCP here far on the left. We're looking at March, April, which we did notice before some of the others had also broken out of VCPs back earlier in the year. This is coming under the 50-day moving average, one contraction, a second, and then a third, finally, pocket pivot over the 50-day moving average, good strong volume, reasonable candle, starts that rally up to lead into the VCP that's broken out of in July. Rally, contraction of 50-day moving average. Next rally doesn't break the swing high, gets pushed back down quickly, like we've seen a fair few others do this before over the same time frame. Crash through the 50-day moving average, carve out a lower low, and then a rally off that. We see a bit of volume change hands here at the low, rally strongly into it, have a bit of a sideways shimmy, but does come up to retest and break through these swing highs. But it does fail and gets pushed back. So whether this is your VCP breakout here with this volume, or whether you wait for the throwback like Mark Minervini signals, and then you see this breakout here, VCP breakout, good strong candle, and away it goes into the fold, into that merger acquisition with Orocobre. So that's no longer listed on the ASX, as you can see the right-hand side of the chart petering out to no more transactions. Then we come over to Anson Resources, ASN. What we're seeing here is that this has rallied in a similar way. Massive rally up, come under the 50-day moving average, re-rallied over it, got under the 50-day moving average, it falls down massively to the 200-day moving average, and then smaller rallies, smaller contractions, higher lows, retesting the highs, higher lows, and then good strong volume, What's interesting here is see this gap here between the candle highlighted to the VCP breakout day. This actually gaps up over the swing highs for the close and does it on reasonable volume, which is more than 150% of the average of the preceding week, 2 weeks and months. So this is a notable spike in volume. Gil Morales and Chris Karcher call this a buyable gap up. BGU, buyable gap up. We're seeing a buyable gap up at the same time as a volatility contraction pattern, and they will say buy into this and then sell into strength. There we're getting a rally coming from that 7 cents range, breaking over 12 cents. That's a good strong rally. If buying over 8.5, where that signals the buyable gap up, that's a decent return in anyone's book. So this is what we're consistently surfacing on Final Market Points, and what we're bringing to you with the leading themes, the technical analysis of them, and then consistently shares in play, bringing those top 6 companies performing over the month. You can subscribe for more of those updates, and thanks very much for watching.